Welcome back to Fast Money. It was another wild, wild weekend for Bitcoin, with the cryptocurrency seeing some huge swings over the last few days. But if today is any indication, the Bitcoin boom is still very much intact. Seema Modi's breaking it down from headquarters. Hi, Seema.
Melissa, after losing 1/4 of its value last week, Bitcoin rebounded over the holiday weekend, though still trading below its recent peak of $20,000. Traders growing more concerned about issues at Coinbase, the most widely used Bitcoin exchange, which today said due to high volume, it's experiencing a backlog of outgoing transactions for Bitcoin and Ether. Now, despite the recent volatility and those concerns around Coinbase, Bitcoin still up over 1,500% this year, and its market cap has risen over $250 billion. As trading operators launch new Bitcoin products, a broader range of investors are showing interest in Bitcoin. And per Google Trends, interest has been rising throughout the year in nations like South Africa and Australia. Melissa, back to you.
All right, Seema, thanks so much. Dan, what were you thinking? You've dabbled in this.
I checked my Coinbase probably like 50 times this weekend, you know. Not that I was bored with the in-laws or anything like that. I'm just saying, in general, I actually thought the lack of volatility, we were talking about on the desk on Friday afternoon before the long holiday weekend, we had that massive, 30-some% sell-off in just a couple days. The fact that it's actually found a level, stabilized, I think it's really important. We were also talking about what Mike Novogratz was saying.
Is it stabilized for real stabilized, or is it stabilized for Bitcoin?
And what's that level?
Yeah, well, I'm just saying it's kind of found a home. It's not moving. You know, I mean, it bounced back and
50% moves to me is interweek is not stabilized. And I think when we talk about this whole theme about Bitcoin, what gets missed in all of this and looking at the value of it is retailers. Imagine a retailer accepting Bitcoin and it's up 30% or down 40% the next day. And I think when we talk about the adoption and what this curve actually looks like, you have to put yourself.
But no one's talking about a currency right now. It's really a store of value argument. There's no currency argument to be made at this moment.
Well, even stored value, and the stored value side, if it's fluctuating by 20% every day, what retailer in their right mind is going to accept this? And
no retailer. I mean, but that's at this point, that's not.
But I mean, you know, Bitcoin's been around for 10 years, and it hasn't necessarily been a solution on payments, right? I mean, you know, now granted, some of this is adoption. A lot of this is what Gene's talking about. But ultimately, this is a new asset class, and there's a lot of different reasons why people believe in it. And without getting to the thesis there, I think it's more important to know that there's an enormous amount of speculation in assets, especially those where people believe there's actually a limited amount of supply. Bitcoin is one of the ones where people can rattle off how many coins are out there, blah, blah, blah. The reality is this is what people are investing in, and I think that's why people continue to want to be
I think that people are investing in it today, but wait till you have a pullback. And I'm not suggesting that this is not the future of value transfer. I believe in it, but I think that this is a bubble, and I think that as soon as it starts, the momentum starts to go the other way, the searches on Google are going to continue to go skyrocketing up, but it's going to be about people trying to get out.
Despite Bitcoin's already massive move this year, Next Guest says it could surge as high as, get this, $50,000 by the end of 2018. Ari Paul is the CIO, co-founder of Block Tower Capital. He joins us now from Stamford, Connecticut. Ari, great to have you with us.
Thank you for having me.
So when did you place this bet, and what exactly is this bet?
It was a little over a week ago, and frankly, I think it's not quite as interesting as people make it out to be. So it was 50,000 strike calls that expire end of next year, December of 2018. And as anyone who's familiar with options, buying an out-of-the-money call is not a bet that something will happen. It's a bet that something could happen. And you're getting good odds, and it gives you a chance to participate with minimal risk.
So if Bitcoin does not hit $50,000 by the end of the year, then this whole thing expires worthless, right? But if Bitcoin rises above, then you have the right to buy a certain number of Bitcoin at a certain price.
Correct. So this call cost $3,600. If Bitcoin settles anywhere below 50,000 next year, it'll expire worthless. But if Bitcoin goes to, say, 100,000, it pays 30 to 1. So it's really a bet, to use option jargon, on kurtosis, fat tails. And the idea is, as we all know, Bitcoin is volatile, right? This is a hyper-volatile asset. Bitcoin is up, as you noted earlier, more than 1,400% this year. It also falls 30% almost every other month. So it is a hyper-volatile asset, and these calls are a bet that if it's volatile to the upside, we could easily see over $50,000 next year.
Hey, Ari, for our viewer, I think it's important to recognize the fact when you're talking about this far out of the money, obviously for a volatile asset, it's really important to remember that this is not a high conviction bet. Would you say that you're adding leverage to an already pretty convicted near the money bet, and just kind of explain that it's a bit more like a lotto ticket on something you're already convicted on where you have near the money participation?
That's interesting. So I wouldn't recommend for most people to buy these options. For me, it's actually the opposite of that. So for an individual, buying Bitcoin is kind of like owning a call, right? So an individual a year ago, they risked $900. That was their maximum risk. And they ended up making, well over 15 times their money. So it acted like a call. And I actually think that Bitcoin still remains a call. So today, you're risking $15,000. And over the next few years, it could well be $50,000 or $100,000. Not saying that it will, but it could. So Bitcoin itself is like a call. So why would I buy calls? Well, I manage a cryptocurrency portfolio, and I'm trying to give investors access to the upside, but I'm also very focused on risk management. And so these calls are a way for me to be to capture that upside exposure while actually owning less Bitcoin. These calls let me capture upside while reducing my downside risk.
So you purchased these calls on LedgerX, right? I mean, you didn't go
That's
to
correct.
the CME or the CBOE, but there are a lot of crypto hedge fund managers right now who are probably looking to do sort of the same thing and actually hedge their portfolio. Do you see this? What sort of effect longer term do you see as more liquidity in options comes about for Bitcoin?
So liquidity, as we know, is very powerful. There's a massive liquidity discount for many assets. When a stock gets added to the S&P 500, it tends to rally. Bitcoin is seeing a massive surge in liquidity. So Bitcoin was trading about $1 billion a day globally just 5 months ago. Now we're seeing $14 billion a day. And this is just the beginning because CBOE and CME futures just launched. LedgerX options just launched. Exchange-traded notes are coming out of the woodworks all over the world.
Does this stabilize the price of Bitcoin? Not stabilize, but does this dampen the volatility at all? What's the longer-term impact?
So very short term, my guess is that it will dampen the volatility as you have more market makers. So right now, there's very little market making. Most people are momentum traders on this. As market makers come in, it'll dampen the short-term volatility, but I don't think it'll dampen the month-to-month or yearly volatility because this is a fundamentally hyper-volatile asset, really fundamentally, which is to say there is no clear intrinsic value. That's not to say there's no value. I think there's tremendous value, but there's no set number. There's no number at which point a Warren Buffett comes in and starts buying a ton or which people start liquidating. The higher the price of Bitcoin goes, the more convinced people are that it has value. And there's some reasonable thinking to that because this is all network effects. The more people use Bitcoin, the more valuable it is.
Hi, Ari, can I ask a quick question? This is Rich Ross here. I applaud your moxie here. This is sort of the Texas hedge. You're long crypto and long calls to manage your risk. Other than that, in terms of defining that risk, how are you hedging this extremely volatile underlying asset other than buying those big upside calls?
So the calls let me have lower beta. Right? I'm able to own less Bitcoin and less cryptocurrency as a whole while still providing my investors with that optionality, with that payoff if Bitcoin goes to $100,000. But if Bitcoin falls by 80%, I get to lose less because I own less cryptocurrency, because these calls give me access to the upside with less exposure. In terms of how I hedge, investors with us specifically are trying to take this bet. They want exposure to cryptocurrency, and they're deciding how much risk they want to take. Right? They're deciding if that's 2% of their portfolio or 10% or 20%. My mandate is to capture the short-term alpha in this market. It's an incredibly inefficient market, and also to provide some exposure to the upside.
Last question, Ari, and that is at $50,000 by the end of next year. If that's not your call, what is your call for Bitcoin? And what's your favorite cryptocurrency at this point in terms of upside?
My call is for extreme volatility with upside potential, which is what makes a very attractive call-like payout. And in terms of favorite cryptocurrency, it's hard to pick one, but one that I think has very real fundamental value aside from Bitcoin is Monero. Monero is a privacy-focused cryptocurrency with very strong engineering. Isn't
that the one used by criminals?
Everything's used by criminals, including the U.S. dollar and the euro.
That's true. That's true, too. That's true. Ari, we're going to leave it there. Thanks a lot for joining us.
Thank you so much for having me.
Ari Paul. Fascinating stuff. I felt like this was right up your alley, Dan.
Yeah, hopefully we'll be doing it on Options Action someday very soon. I just think it's really important to remember, like, when you think about $3,600 call 1 year out on a 50,000 strike, that is still 7% of the 50,000 strike. The probability of making money on that is very low, okay? So to me, I think there's a lot of people who own this volatile cryptocurrency who'd rather sell those out-of-money calls to actually kind of take in some premium against this volatile asset.
Just throw one other kind of summary point out here is he talked about the reason why he put this trade on is because of the volatility, as you just said, Dan. This is not necessarily a bullish statement about the near term around crypto. I'm a believer longer term, but this is about a bullish statement on volatility.
Look, ultimately, what I think Ari is doing is trying to employ a number of risk management methods or portfolio management techniques.
Right.
And that ultimately is the question that I have for anybody that's managing a fund in crypto. What's the skill set? What's the track record that either entitles you or gives you an edge over other people in this space? And that's really what I think we're all about to learn.
All right, still ahead, retail stocks on fire after seeing a surge in holiday sales. But there's something in the charts that suggests some of these names may have run too far too fast. We'll break it down. Plus, Tim's had